It's now time to take a look at the market performance for the day. Rhynhardt Roodt, Portfolio Manager at Investec Asset Management, now joins us from our studios in Cape Town. Thank you so much, Rhynhardt, for joining us today. Much appreciated. A positive day on the JSE. We're up around 0.5%. We started to see US markets in early trade falter. We also saw a bit of a reversal coming through in European shares, which were largely positive, but now sitting on the flat line and more heading towards a negative trade. Are all eyes going to be on the US unemployment and, of course, ECB and BOE monetary policy meetings, or do you think that that news has already largely been priced in?
Yeah, sure, difficult question because it's such a kind of a short-term issue. But I think maybe your first comment is correct. I think all eyes are certainly out of the data from like the US. And it's hard to see which way it's going to go. In our opinion, markets seem to be either at best going sideways or maybe marginally like trending downwards, and we're still relatively cautious for the next couple of months. As I've said to you in the past, I don't really think that like equity markets are really offering spectacularly value, and there's a lot of macro headwinds that markets have to deal with. So it's certainly a very macro news flow driven market at this point.
With regards to some of the biggest moving news today as well, Metorex under the spotlight, in fact, since yesterday, because Metorex had said that they hadn't received any firm offer. Vale this morning said they expect Metorex to receive another offer from another counterpart, and today we've received formally another offer from Zhinshuan, of course, Chinese company, coming in at R8.90 a share. And we know Vale's bid was at R7.35 a share. What is your view on this? And I think you're also quite happy because you bought Metorex at the right time, I'm assuming.
Yeah, you are correct in saying we are one of the larger shareholders in Metorex, and I do think shareholders have a lot of reason to be happy. We think that the R8.90 is a lot closer to the fair estimate to what we would have liked to see, and it's obviously at a fairly significant premium to the Vale offer. So the Vale offer was $7.35, but I think you have to bear in mind that you still would have gotten another 15 to 20 cents from the disposal of non-core assets. But overall, we think it is a relatively fair price for the company, and a company like Metorex has a lot of great assets, but it doesn't necessarily have the balance sheet or the firepower to actually bring those assets to market. And it's always going to be worth more in the hands of maybe like a larger company with the cash resources to develop those assets. So I think if it does end up in a bidding war, I still think that the Chinese will probably end up winning. They're a state-owned entity, whereas Vale is owned by shareholders, and I don't think they're really in a position to pay perhaps as much as the Chinese, but they have 8 days to come back to the table, I think until next week Friday. So it's going to be very interesting to see how it does play out. But yes, we're fairly happy shareholders at this point.
Well, I mean, as you mentioned, they've got around 8 days. We also know that Vale says that they're not going to come to the table with a better offer, so perhaps a bidding war unlikely at this point, Rhynhardt.
Yeah, it could be. If they were going to come, I think, with a counter bid, they certainly were not going to say it straight away. So I think it's still early days. So yeah, I mean, we'll kind of really will have to wait and see. But as I said, I still think if it does end up in a bidding war, I do still think that the Chinese will be able to, at the end of the day, maybe pay slightly more than what Vale will be able to pay.
So Rhynhardt, I mean, Metorex is up around 8% today. So for those that weren't involved prior to all these announcements, do you think it's too late to take advantage of a possible takeover?
Yeah, it's difficult because I think let's put it this way: the odds of maybe like a counter bid from Vale, maybe it's 50-50, but if you look at the R8.90 offer and you assume you'll maybe get your money in 6 months' time, we've kind of worked out that assuming that your cost of like interest rate investment is roughly about 0.5% a month, so the share price should be trading roughly close to R8.63 odd in order to compensate you for the time value of money. So I don't think there's a lot in it, unless you firmly believe that it is going to be a bidding war, and really that is 50-50. I've got no real significant insight into that.
Okay. So Rhynhardt, also Goldfields coming under pressure in today's session, down 1.7%, gaining 3% yesterday, out with production numbers today, saying the second quarter production will be up by 5%. It seems that most investors are focusing on cash costs, that's going to be increasing. But then again, at a gold price of around $1,500 an ounce, do you think that it still makes for good business and good investment to look at a company such as Gold Fields?
Look, gold companies, like as you know, they are certainly facing a lot of headwinds. So if you look at the case of Gold Fields, we think that the production update was very much in line, I think, with market expectations. On the cost side, yes, it does seem to be a bit higher than expected because their volume numbers are up 5% and their costs are up 8%. So what you would expect, if they're able to grow units by 5%, you would expect maybe costs to be down by the same amount, and it in fact was slightly higher. But it's still early days, and we have to see really what the numbers will actually tell us. But at current rand gold prices, we think that the company should be able to make well over R2 in quarterly earnings. So if you annualize that, you get to maybe full year numbers close to R8. And with the share price where it's trading currently, it's certainly one of the lowest PE relative ratings where Gold Fields has traded relative to its own history. So I think we like the sector in general. We think that gold equities have certainly deviated from the rand gold price fairly significantly, and certainly if you just look at it in the short term, we think that there is a bit of an opportunity there. But we like Gold Fields, we like the sector, and we're still relatively optimistic on the outlook for the rand gold price.
Rhynhardt, we've run out of time. Just very quickly, Group 5 came under pressure in today's session, saying that headline earnings per share going to be down by around 55, well, by as much as 55%. No surprise that the construction industry has been in the doldrums.
Yes, definitely so. If you look at the rate of decline, earnings down 45 to 55%, I think the worst is certainly behind them. What's more interesting is that their outlook statement is not that optimistic. I think it's still going to be a very tough 6 to 12 months that actually lies ahead, and perhaps it's maybe a little bit early to get involved. Even though I think that order books for the construction sector might start growing, we still have a little bit of a concern around operating profit margins, and we probably only think that you'll start seeing good earnings growth from that sector come maybe 2013 odd. So perhaps a little bit early, but I think the worst is certainly behind the sector.
Thank you so much for joining us. Much appreciated.